All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I am going to make a video that I did not think I was going to be making at all. This is, in fact, a little bit the opposite of what I thought I was going to be doing. I want to talk about a Bitcoin mining company that I have been buying all year that I think has made a significant change to their philosophy, and for me, it's a deal breaker. So I want to go through what happened with them. I'm talking about Iris Energy, stock ticker IREN. For those of you who follow the channel, you'll know I just started my position in them in 2023, and I have been adding to them all year. But they did something yesterday that for me I think is a deal breaker. I'm going to tell you what I'm doing about it, but more importantly, I want to go through the two sides of the story here. If you enjoy this content, you can help the channel by smashing the like button. So I'm hoping to get 250 likes on this video. It really makes a huge difference, so I would appreciate that. Thanks so much. And of course, if you're not yet subscribed, if you do enjoy this content, please subscribe to the channel and hit the notification bell so you never miss a video. The risk profile has changed so dramatically that I have to reevaluate what I'm doing with this stock. I don't want to make a knee-jerk reaction, but I am not buying any more shares today, and I have decided I will not be buying any more shares going forward. We're going to get to the thing that is a deal breaker for me, and then you guys can decide whether you agree or disagree. And, do your own due diligence, and you may come to a completely different conclusion than me. But I want to explain exactly what I think is happening here. So the first thing is, you'll see today Iris is having a very good day so far. It's in the morning. By the time you see this, it'll be in the afternoon. It's up 8.5% at the moment. It's been fluctuating but green all day. It's moving along with Bitcoin. The Bitcoin miners so far are having a very good day. So that may very well mean that at least for today, the market probably disagrees with me. We will see, though. Sometimes this takes a few days to sink in. So I definitely will be paying attention to their price action versus their peers over the next few days and weeks to come. For the moment, this is good news. You'll see Yahoo's reporting their market cap at $251 million. If you look at the number of outstanding shares they have per the financial statements that they just released yesterday, their market cap adjusted for their price today is more like $300 million. This still puts them among one of the smaller market caps. By that measure, I did think there was a lot of room from a market cap standpoint to the upside, and that's been one of the things that I like about this stock. That low market cap, to me, has an opportunity to double or triple or quadruple and still be a good price. So I know so far it sounds like I'm presenting a bull case, and I'm going to continue because there's more good news to follow. This is the press release that they put out, and then in a minute I'm going to go to their actual financial statements. A couple of things I want to highlight on here. This is a company that had adjusted EBITDA of $1.4 million. So that is positive EBITDA. Yes, for GAAP purposes, they lost a massive amount of money, but I don't worry as much about that because a lot of that, like I said, was one-off charges, write-offs they had to take. So if you take a look at them from an EBITDA standpoint, they were positive. They made money. The other thing right below this, $68.9 million of cash and cash equivalents at June 30th. So they have cash in the bank. I love to see that. And then no debt facilities. This company has no debt. That is one of the key things that I have been talking about. I know there's been a lot of misunderstanding out there. I'm getting a lot of questions like, what was your source? Why do you think they have no debt? And they go 6 months between financial statements. They don't do quarterly financial statements, so you really had to keep up with all of their filings to see that they had gotten rid of all of their debt. So I did do several deep dives and explained exactly how that happened, but now you don't have to watch those. You can see right here, they're disclosing right here, and we'll go look at their financial statements. They have no debt. In addition to that, this company was cash flow positive for the year. So those were all the things that I said I was looking for. So I want to point all this out and go through this because, again, to be fair, there may be some people that think this is good stuff and have a totally different opinion on this company than I do. So I do want to fairly present both sides of what's going on here. So that checked every box that I was looking for. Just quickly on their income statement, and again, this is for the year. This is the year ended June 30th, 2023. Bitcoin mining revenue of $75.5 million. Electricity charges of $35.7 million. So you can see from a cash basis, they have a big gross profit. They had positive EBITDA. But for me, equally importantly, if you look at their balance sheet, they have shaped up this balance sheet in a massive way. I'm going to go back in time a little bit to their balance sheet at December 31st, which was 6 months ago. If you look at this, they had current assets of $74 million. They had current liabilities of $140 million. That is a 1-to-2 negative current ratio. So that is a big, big problem. And I don't want to get into it. If you do want to know how they did this, I did some deep deep dives and explained exactly how they did this. But they were able to get rid of all that debt essentially without really paying a penny. They did, however, have to give back most of their machines to do so. And you're going to see all of a sudden now they have $89 million of current assets, most of which is cash, $68.8 million, against only $24 million of current liabilities. Instead of having a negative current ratio of 1 to 2, they now have 3.5 times as much current assets as they do current liabilities to pay. And then you'll see if we look at non-current liabilities, $2.7 million, none of which is long-term debt. So they have eliminated their long-term debt completely. So all of this is good. I like the income statement. I like the balance sheet. This is everything I was hoping for. So you may be wondering, so why have you changed your mind and why are you not going to buy any more of this stock? So I'm going to get to that right now. Okay, there's two pieces to this puzzle. So the first one is, this is the cover page of their investor presentation. It simply just says two things. In addition to their name, Iris Energy, it says 1.4 cents power and 30 exahash per second Bitcoin mining. So that is the premise of what this company has structured for their plans going forward. And you're going to see how they plan to get there. It is my strong opinion that neither of these things are going to happen. So the entire premise that this company is banking on going forward, their business model going forward, is predicated on 1.4 cents in power costs and 30 exahash per second in Bitcoin mining. So that's not my opinion that that's their business model. This is page 1 of their investor presentation, and it's the only thing page 1 says. So this is what they plan to do. So again, this is where you may differ in opinion. I believe the chances of this happening are so remote that they're immaterial. I do not believe they can achieve this. Like I said at the beginning, if they do achieve this, this puts them at a level that nobody can compete with. Nobody is talking about performance at this level. There are a few Bitcoin mining companies that are talking about getting to 30 exahash, but nobody's talking about 1.4 cent power cost. And later you're going to see they also contend that with all these numbers, they will still maintain maximum capacity and essentially mine more Bitcoin per exahash than all of their peers. That's one of the core components of what they believe separates them from the rest of the Bitcoin miners. Okay, so how are they going to get to 30 exahash? They're, I think, at 5.8 exahash right now. On the same day that they put out their year-end financial statements, their F20, they filed Form F3. This is a $500 million shelf offering. So this is a $300 million company doing a $500 million shelf offering. Now, ordinarily, I wouldn't be that worried because, you know, a lot of times these companies put out big shelf offerings and there's no telling how long. You know, this is so that if opportunity knocks, they can answer. However, that's not what's going on here. If you go to page 6 of their investor presentation, and it's really important to listen to the earnings call as well because they go into detail and talk directly about this. So you're going to see it is their plan to spend $626 million of funding to get to 30 exahash. So that is $69 million of the current cash that they have on hand. So whereas to me that seemed like a buffer going into halving, they're committing that they're going to spend this for infrastructure. More importantly, $500 million shelf offering. So they did say on the conference call, he specifically said that he anticipates using this entire shelf offering, quote, at a minimum. So this is not a maybe. This is their plan. They plan to spend all $500 million of this shelf offering on infrastructure to get them to 30 exahash. 100% of this plan is building out the Childress operation. This is an extremely, extremely aggressive plan. So I do like to see growth. I wanted to see more growth. They had already talked about getting to 9.1 exahash sometime in 2024. I was comfortable with that amount of growth. This aggressive plan to spend $626 million to get to 30 exahash, this will cause massive dilution. So, you know, ordinarily I don't complain about dilution. In fact, I usually defend it, but this is a $300 million company looking to add $500 million of dilution. That is very disproportionate. A lot of the dilution we talk about is 5% or 10%, or sometimes 15 or 20% we talk about as massive dilution. This could be 200% dilution or more by the time they're done. So all that room they had to grow in market cap is going to end up being in issuance of new shares. So even if they become a $700 or $800 million market cap company, that would mean that their stock maybe would be sideways or down over that course of time potentially. Now that's no guarantee. That's my opinion. Their stock could skyrocket for all I know. If they continue to operate at a high level, and most importantly, if Bitcoin gets healthy, then this is a plan that could end up working out. Having said that, still 30 exahash, $626 million does drastically change their risk profile. And in addition to that, one of the core underlying premise for them is that they're going to have energy cost of 1.4 cents per kilowatt. So nobody is doing that. I do not think that is going to work out for them. They did have some fantastic energy cost at Childress in August. In fact, they had negative energy costs. They got paid a lot of money, but that was in exchange for curtailment. So it's hard to argue that you're going to be one of the highest producing Bitcoin miners, and at the same time, you're going to curtail a lot to get paid to keep your energy costs down. Those two things are the opposite. So to me, I just was not expecting a $500 million shelf offering that's already committed the day they put it out. So again, for me, all my investments, I'm a long-term investor. I'm a buy and hold investor for the most part, and risk reward is everything to me. So although I love everything this company has done over the last year, I think their performance has been excellent. This is the most aggressive Bitcoin mining strategy out of all the Bitcoin miners, in my opinion. This stands to be maybe 200 or 300% stock dilution over, they did not say what period of time. When asked that specifically, they said, they can't give a specific answer to the time frame. Just simply based on the massive change in the risk profile of this company, I will not buy any more shares of this company. So I have not made any moves today. I don't want to make a knee-jerk reaction. My impulse was to dump this stock, but I don't like to do that. This is a good company. I went through an awful lot of very good news. So we'll see. They may temper this back a little bit over time and get a little more realistic, but I don't like to see companies overpromising in a way like this. They could have rolled this out in bits and pieces in a much more palatable way for investors, in my opinion. I will likely hold the shares that I have because I don't think they have to do every single thing that they just said to be a successful company. The one concern I have is that they get out ahead of themselves. If they do get too much dilution too fast, I think it could be a problem, especially this is a company that already had to give back, 2/3 or 3/4 of their machines to extinguish all of their debt because they got too aggressive. So to me, I just feel like it's a company that's already been down this road. They've already made this mistake, and it may not be a mistake this time. So again, everybody's going to have a difference of opinion. So I want to reiterate, this is not financial advice. I'm not telling you guys to sell this company. For me, I was very surprised by this. This is not what I was expecting. So financially speaking and operationally speaking, they did everything that I hoped they would do, but this new information, this new game plan of theirs, to me is just too much. So please be careful. Do your own due diligence. Best of luck investing. Thanks so much for watching. Again, this is not the video I expected to make today, but I can only tell you how I feel about it, and then you guys need to make your own decision, obviously. So thanks again for watching, and we will see you in the next video.